can you talk about, from two different perspectives, what are all the areas in our lives, or the most important areas of our lives where credit actually touches that we may or may not even think about? And then also talk about, I want to go deeper into this interest rate thing, because I don't think people fully understand the power of compound interest. 8% credit, 8% interest rate versus 9% can be drastic over the course of a 30-year loan, especially if you're talking about a house. So let's talk about that for a little bit.
So yeah, it gets deep, right? The thing about it is kind of interesting is that you're looking at, delinquency rates and credit scores across a bunch of different spectrums, right? So credit scores in kind of that 600 range, credit scores in the 700 range, credit scores in the 800 range. And with different APRs associated with that, that's your cost of capital, right? Your interest rate, AKA cost of capital, what's going to cost me to get in? First, you got to get in the door, right? So different banks, different institutions have different underwriting standards and underwriting minimums. So that's why you'll see some banks say, hey, we'll accept this risk at 16% interest, at 15% interest. Some banks will be like, even at 15%, I ain't touching it. All right. So there are some different, not regulations per se, but different underwriting standards for different institutions and different profiles, because they think they can get a little bit more juice on their spread, kind of playing in different tranches. So the piece that's kind of interesting is the part where you talked about that people don't realize from credit score. The one piece that most times folks don't think about is that job offers can get pulled because of credit scores. Most folks don't think through that real quick, especially in financial institutions. So I did all the work, got my good resume, went through the interviews. You submit. So after you get the job offer, you submit that piece for them to do a background check. Your credit score is part of that background check. All right. So in that, the banks actually, especially banks, not all institutions, some even insurance companies, depending on the type of position you have, they do have the right to rescind an offer because of bad credit scores. That's ones that people sometimes, like, your livelihood can be affected by your credit score, your auto insurance rates. So if you have the same driving record, same 15 years, same accidents or no accidents, and you have a 600 credit score and you have an 800 credit score, your actual your cost of your insurance can be almost double.
Wow.
Zebra.com did a study on this. Actually, one of my boys is pretty senior over that organization that compares cost of car insurance across the nation. And your credit score is a significant implication, because here's what the insurance company is saying, especially if you're on monthly payments, I want to make sure I can get my money from you. And the consistent people that pay are usually the higher credit scores. So if you don't pay, I'm going to charge you a whole lot more, like from a delinquency standpoint. So car insurance, you don't typically think about that, but that's a significant impact. Your actually life insurance policy runs your credit score too. Health insurance, they can't, but life insurance, they can. So those are just a couple. And then when people think about their credit scores in general, what they fail to usually do is compound all of the things that number touches. Mortgage, car loan, your student debt, your credit cards. And so you got to look at from a cost of living spectrum across all those. So when you think about your mortgage and it's a $400,000, $500,000 house, 7% or whatever, and you look at it and like, hey, that's a high cost for that thing, you got to look at it like, hey, I'm paying 25% interest on my credit cards too. So if you move that one number up, you can cut all those across the board down. So that's the piece that is sometimes it's like, how do you turn on that broader vision to see that this one number impacts such a bigger base of your cost of living?